Welcome back. You're watching Money, Money, Money. It's tax season, which is why we're here to prep you up. Now you have the 5-point checklist to make sure that you've done all your tax homework properly. We've got some queries on social media, Parizad, as well, on the issue of tax. So I just want to toss these questions to you. This one is from Jeba. He's saying, how are dividends taxed? Because companies already pay tax on dividends. Do I need to pay anything additional as well? This was the big concern in this year's budget, in Budget 2018.
Yeah.
But on shares right now,
shares
nothing changes.
Dividends is tax-free. So unless you are really a heavy investor and your dividend is crossing 10 lakh of rupees on the balance, and there is a tax element. Otherwise, largely dividend is, as you said, corporate tax pays the DDT element.
Okay.
And if you have listed equity shares or equity shares, anyways, dividends is tax-free. But you have to again disclose that as exempt income when you file your annual tax return.
Oh, so you still have to disclose it?
Yes, even if it's exempt. You have to disclose it as exempt income.
And above the 10 lakh threshold, if you are a heavy ticket investor, then there's a 10%.
Yeah.
Okay, that tax that kind of comes in. Also, of course, on mutual funds, now dividends are going to be taxed, but we'll worry about that in the new financial year. Right now, I think we're still safe. Next question comes in from Vivek Desai. He's saying, if someone has had losses in the stock market and is a government employee, can those losses be offset with government salary? I think slight confusion in the question. I don't think it has anything to do with salary, but losses can be offset. Losses can be good, right? Because you can offset them against some form of gain. So just explain that to us.
So we spoke about these heads of income in the starting of the show, right? So if it's income from capital gains, income could be obviously positive income as well as losses. Now, I mean, we're familiar with the concept of short-term and long-term, right? Depending on the period of holding of the asset class. Largely, capital losses are set off inter se against the capital gains only, not really against salary income or any other income. Of course, now the question that is that, whether long-term capital gains are generally exempt, so far. So if it's an exempt income and if you incur losses on long-term, then you can't set off that because its income is not taxed. So the loss is not set off against even the short-term capital gains, if any. But if you have an asset class where you've incurred a short-term capital loss and you have a long-term capital gains which is otherwise taxable, you are able to set off that short-term capital loss against the long-term. And if you can't utilize the full loss, then there are provisions for carrying it forward as well.
And how many years is the carry forward?
It's largely 8 years.
8 years. So you can keep your losses, don't forget about them. You can sort of make good using those losses for the next 8 years.
People generally ask whether it's offsettable against salary. The answer there is no.
So nothing against salary, but we're just talking about capital gains and capital losses, which now brings me, as we're winding the conversation down, to the big issue. What happens after April 1? Because we're getting into a new regime with respect to long-term capital gains. Is there anything prescribed? Does someone need to do anything with their existing long-term gains before this year closes out?
So, it's again, your objectives of investment cannot be driven only by tax, right? And, from 1st April 2018, clearly the tax provisions have changed. So, if you are selling something which is of a long-term nature above the 1 lakh threshold that they've prescribed, it's clearly going to be taxable at a particular rate from 1st April, which was not the case so far. So, people were used to, holding on to the asset class for a particular period of time and not worrying about taxes.
Thank you, Parizad. Very helpful. Thanks very much for drawing up this checklist for us. So there you go. Now you know exactly what you need to do before the 31st of March. So good luck with your tax planning. Of course, your feedback, questions, queries, welcome as always. We'll see you again next week.